Hi, I'm Jessica Amir for the Finance News Network. Joining me today from Centuria Industrial REIT is its fund manager, Ross Lees. Hi Ross, and welcome back.
Thanks for having me, Jessica.
Thanks for coming in. So first up, for those who haven't heard of CIP, just give us a quick introduction.
So Centuria Industrial REIT is Australia's largest ASX listed industrial investment vehicle. We own a portfolio of 41 assets located around Australia with a portfolio of about $1.2 billion. Our objective is to deliver unit holders with rental income from that portfolio in the form of distributions and the opportunity for capital growth on their investment.
Now let's dive deeper into the fund. Just give us an update on the tenant profile, Ross.
So the tenants that ultimately pay the rent and in turn the distribution to our unit holders are really high quality local and international companies. And some of those names that people might be familiar with are companies like Visy, Toll, DHL, Australia Post and Woolworths. Our portfolio's got enough scale now where we're seeing right across the portfolio tenants finding the opportunity to mix and match around the portfolio and expand their footprint within CIP as well.
And can you give us an update on the key metrics?
The portfolio value is now $1.2 billion and our occupancy has improved over the half up to 97.1%. And our weighted average lease expiry, which is the average duration of our leases, is now 4.7 years. Our assets are well diversified around the country with 64% of the portfolio in the dominant markets of New South Wales and Victoria. And our average asset size is just under 20,000 square metres. And that's really important for us at the moment because that's where we're seeing the depth of tenant demand across the country.
Changing pace now, congratulations on your first half 2019 results. Maybe you can just give us some highlights.
It was an excellent first half for us across the portfolio. We really continued on the momentum that we built up last year in the leasing side of the portfolio. And as I said, we've improved occupancy to 97.1% now, which was a great achievement for us. We've expanded the portfolio with $110 million of acquisitions, most of which were executed off market, and they're really complementary to the existing portfolio. And then from a financial point of view, our return on equity was a real standout. We've delivered 15.8% return on equity for the last 12 months.
And Ross, just generally, there seems to be a lot of interest in the industrial sector, both here in Australia and globally. What's taking place and what's fueling this?
Yeah, so the industrial asset class has probably been the most in-demand real estate asset class, both in Australia and globally over the past 1 to 2 years. At the moment in Australia, we're seeing over 20 groups trying to increase exposure to the asset class. What's driving this is the global thematic around e-commerce and online retailing. What we're seeing in Australia for that is 25% per annum compound annual growth rate in online retailing in Australia. And users that are related to online retail, e-commerce, are creating that uptick in demand to occupy the space, and that's in turn creating investment demand from investors around the world.
And just lastly, Ross, on the back of this hype and increase in competition, how have you managed to continually grow and find value?
Look, our acquisition philosophy is simple. We look for assets that are high quality, in the right location and that are the right size to meet the ongoing needs of our tenants. Where we've been looking really quite hard over the last year or so is in assets that are under 20,000 square metres. When we analyse the markets nationally, that's where we're seeing the greatest turnover of tenant demand, and that should keep the properties occupied long term. So we're spending a lot of time trying to find value in those opportunities. In the last 6 months, the last half of the financial year, we identified and executed $110 million worth of acquisitions that are complementary to the portfolio and that we believe have great long-term growth prospects.
Wonderful, and well done on your success, and thank you for your time, Ross Lees.
Thank you, Jessica.